Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money secrets big companies try to hide in their filings. Get ready, because X Square Balanced Fund is about to spill the beans on their performance, and let me tell you, there are some interesting numbers in this report. Now, the big story here is how this fund performed over the first half of 2025, ending June 30th. The report shows us how the money is doing and where it's going. The fund managers are saying they had a pretty good first half of the year, while a common benchmark, the 60/40 portfolio, saw a 5.33% gain. They also mentioned distributing dividends, which is like giving a small payout to the people who invested in the fund. They're pointing to market turbulence as an opportunity they could grab onto, making the most of those ups and downs. Looking back since November 2019 to June 2025, the X Square Balanced Fund Class A saw an increase of 10.84%. Compare that to the S&P 500 Total Return Index, which jumped 15 during the same time. That means while your money grew in the X Square Fund, those who invested in the S&P 500 saw even bigger gains. It's a classic case of comparing apples and even more exciting apples. Let's dive into some of these numbers with a hypothetical $1,000 investment from November 121. 20,000 shares grew to 121. The $21,000 13s in 2022. That's a Class A shares grew to 140, 421 to 180 each. Looks pretty good, right? But when you look at the S&P 500 benchmark, that same $1,000 would have grown to a whopping $2,252. That's a significant difference, and shows that while the X Square Fund might be balanced, the broad market 20,008 are 8. This looks pretty good, right? But when you look at the S&P 500 benchmark, that same $1,000 would have grown to a whopping $2 has been much stronger in dollars, and the institutional shares grew to 5,009. That same $1,000 would have grown to 21 1 40 of you whopping to a whopping 2012. That's a significant. When we look at the average annual returns, Class A shares returned 7.78%. Since inception, Class C returned 6.91%, and institutional shares returned 8/500s 15.05%, and the 60/40 benchmarks 9.28%. Respectively, you can see a pattern here. The fund is growing, but not as fast as the broader market indexes. The fund has total net assets of $769,759,747 portfolio holdings. This means they've spread their investments across a good number of different assets. The portfolio turnover rate is 9%, which is quite low. This suggests the fund managers are holding onto their investments for a longer time rather than constantly buying and selling. This can be good, as it often means lower trading costs. Now let's talk about what the fund is actually invested in. The report breaks down their investments by maturity and top holdings. For maturity weighting, a significant chunk, 25.04%, is in investments maturing over 10 years. This indicates a longer-term investment strategy. Other maturities range from 1-30 years at 0.06% to 5-10 years at 2.12%. A notable portion, 6.96%, is in investments with no maturity, which could represent things like stocks or certain types of funds. Looking at the top holdings, the fund has significant investments in mortgage-backed securities like Ginnie Mae 2, Paul's, with interest rates around 2% to 2.5%. They also hold US Treasury bills and bonds with yields varying. Notably, companies like Walmart and Meta Platforms are among their top stock holdings. This mix suggests a strategy that balances stability from government-backed securities with growth potential from equities. Let's check out the balance sheet as of June 30, 2025. Total assets are around $71.9 million, with liabilities at about $217,000. This means the fund has a very healthy net asset value of roughly $71 in the balance sheet in the dollars, indicating that liabilities are well managed compared to assets. The net asset value per share varies by class. Class A shares are at $14, Class C at $13.46, and institutional at $14.25, Class C at $13 value of the fund's investments. Adjusted for each class's specific fees and expenses, For the first 6 months of 2025, the fund generated investment income of $588,824, but had total expenses of $643,119. This resulted in a net investment loss of $564,119. This resulted in a net investment loss of $564,995. This means the income generated from investments wasn't quite enough to cover all the operating expenses during this period. However, the story doesn't end there. The fund had a net realized gain of $2,517,117, unrealized gain of $392,502 from the increase in the value of investments still held. This brought the total net increase in net assets from operations to a very positive $2,522,527, from the increase in net assets from operations to a very positive $2,853 from still held to 17. Hier vindt $105 in Profit 17. $53 in $182,502 vary from the increase in net assets from operations to a very positive $2,853,182,500. Looking at the changes in net assets over the 6-month period, the fund saw a significant increase due to capital share transactions. The proceeds from the sale of shares, especially Class A and institutional shares, were substantial. This indicates a healthy inflow of new investment money into the fund, and good news here, most of the distributions to shareholders were classified as a return of capital, not from earnings, which can have tax implications for investors. The financial highlights tables give us a really good snapshot of performance for each share class. For Class A shares, the total investment return based on net asset value for the first 6 months of 2025 was 4.7 serious positive growth. But again, remember the benchmark performance we saw earlier. The expense ratios are also important for Class A shares. The ratio of actual expenses to average net assets is 1.92%. For Class C, it's 2.72%. And for institutional, it's 1.66%. These ratios tell you how much of the fund's assets are used to cover operating costs. Keeping these low is generally better for investors. The specific portfolio turnover rate for the 6 months was 8.72%, which is indeed for periods less than a full year. If we look at the full year 2024 for Class A, it was 19.58%. For institutional, it was 0.00%. For Class C, it was 19.58%. And for institutional, it was 0.00%. This is a bit odd. For institutional, it was 0.00%. This is a bit odd. For institutional, it was 0.00%. This is a bit odd. For institutional, it was 0.00%. Scroll notes to financial statements section now. A quick look at some of the notes to the financial statements. The fund is registered under the Investment Company Act of 1940, and its investment objective is to conserve capital, current income, and long-term growth. This balanced approach is reflected in their holdings. Scroll note 2, significant accounting. Policy CHINs, the fund values its securities daily based on market prices. The valuation process is quite detailed, aiming to reflect fair value even for hard-to-price assets. They use a hierarchy of inputs: level 1 for quoted prices in active markets, level 2 for other observable inputs, and level 3 for unobservable 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 inputs, level 1 for quoted prices in active markets, level 2. Scroll investments in securities at value change EUOS of June 30, 2025. The fund's common stocks were valued at 46,23841 assets, meaning they are priced on active markets. Government bonds were valued at $2,369,523, also level 1 assets, meaning they are priced on active markets. Government bonds were valued at 2,000 active markets. Borrowed active markets government bonds were valued at 2,000 active markets. Government bonds were valued at $2,036.93. Also level 1 mortgage-backed securities, a large portion at $17.9528 to 2,000 Zalov portion at $17.9528 to $1 fell into level 2, meaning their prices are observable but not directly quoted in active markets. Scroll note for investment advisory agreement captions: the investment advisory fee paid to X Square Capital LLC is 1% of average daily net assets annually. This is detailed in the notes along with expense reimbursement agreements. The advisor has agreed until at 25 to SB 2 2025 to cap certain expenses to ensure they don't exceed 2.75% for Class A, 340C% for Class A, 345 advisor to limit costs for investors. Scroll note 5, Agreement Kemch. The fund also has distribution and shareholder servicing plans like Rule 12b-1. This allows the fund to pay fees related to selling shares and ongoing shareholder services. ALPS Distributors Inc. acts as the distributor, and ALPS Fund Services provides administration and transfer agency services. This means there are several third-party companies involved in the fund's operations. Scroll note 8. Risks and UN Accession Toll. The report also touches on risks like the ongoing war in Ukraine and its potential impact on global stability, supply chains, and inflation. This acknowledges that external geopolitical and economic factors can significantly affect investment performance. Overall, X Square Balance Fund is a diversified fund with a strategy aiming for capital preservation, income, and growth. The numbers show positive growth since inception, but the performance lags behind major market indexes like the S&P 500. The net investment loss in the first half of the year indicates that expenses outpaced investment income during that specific period, however, gains from selling and appreciating assets. The low portfolio turnover for most classes suggests a more buy and hold strategy. A key takeaway is the expense ratios and how they stack up against the fund's performance in the benchmark Izumacho. So what's my take on this X Square Balanced Fund is clearly aiming for a stable, balanced approach, which is good for investors who want less volatility. But if your goal is aggressive growth matching the performance of indexes like the S&P 500, might be more appealing. The fund needs to keep attracting new assets to potentially dilute the impact of expenses and improve its relative performance. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe. For more deep dives, don't forget to check out the Discord in the description. Thanks for watching. See you next time.